Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on gold and silver, and we'll check in on the miners and USLV like last weekend. So I'm watching a broader pattern on the weekly time frame for gold, and this downtrend line is drawn on a different time frame, so it's a little bit skewed here. If I were drawing it on the weekly time frame, that's where I'd put it to make sure no candlestick closed below it. But essentially, watching to see which direction we break from this channel, and it's going to indicate a longer term directional movement, and that might not happen for another few months. So definitely keeping an eye on that. But what stands out the most to me is the break of the higher low pattern, where we had been in an uptrend pretty much all of 2017 bouncing, and we have lost that uptrend. So yeah, we did see a nice green week yesterday, or last week I should say, but this is not going to change the fact that we broke the higher lows. And every time we break that higher low pattern, I instantly shift my mindset. So now I'm looking for lower highs and lower lows. So we could bounce another 2 weeks, and as long as it's another lower high, I would anticipate to pull back down towards the 1200 area. So keeping in mind that that uptrend has broken is very significant. And really, to change breaking that uptrend and to favor the bulls again, we have to get over 1300, where we have this little double top, in order to re-flip the trend, which has just changed. And people say zoom out and look at the overall trend, and I do that, and the overall trend has been bearish for the past 7 years, or the past 4 years. So we did see a very nice bounce play out in 2016, but that has erased a lot of those gains to the upside. And considering where we are coming from, I mean, it all depends on the time frame, because you look all the way back, and obviously we're in an uptrend. But as of right now, because we broke that higher low pattern, in the midterm, looking a couple of months out, it is hard for me to be bullish gold here. And granted, we're going to see some bounces along the way, but you look at the daily time frame and see where we're coming from. And yeah, we've seen a nice bounce, but really it's done nothing compared to the pullback that we've seen. So in order for bulls to change things, we have to see higher lows and higher highs continue. We are on the verge of a bullish MACD cross, so we could absolutely see a move up to the 1250s or 1260s. But again, until we break this double top, it's very hard to be bullish on oil technically, or on gold, excuse me, technically speaking, for the next couple of months. And again, it's all because we broke this support line and we broke the higher low pattern. This very nice uptrend broke after a double top. So I do anticipate some lower highs and lower lows to continue forming. And also watching the dollar. The dollar has been very weak all of 2017. If that were to change, that would obviously weaken gold. And the fact that we have not seen more upside with gold, with the dollar so weak in all of 2017, stands out as well. During this whole downtrend, the dollar was still extremely weak. The dollar strength had nothing to do with this pullback on the daily time frame over the past month for gold. So keeping that in mind as well, really I would expect gold to be stronger with that dollar weakness. So the bull miners here, GDX, we've been in a clear downtrend on the daily time frame now, all of June, so over a month at this point, of lower highs and lower lows. We're struggling at the daily middle Bollinger Band resistance, 2 of the last 3 days rejecting from that level, trying to get over that and see a bullish MACD cross, but even then we have to break 2281 to break this daily lower high pattern, so still a lot of work to do. Need over 5% for the bulls to break the downtrend on the daily time frame over the last month. And we look at the daily time, or the weekly time frame, and it's very clear that we are not seeing the upside action. We saw a nice bounce in December and January, but since then it's just lower highs and lower lows. It's been nice and contained. We're not dumping or anything like that, but it is clearly favoring the bears without a ton of price action, but that price action, or I should say a ton of volatility, but it is definitely favoring the bears. There's no way around it, where from February to July now, over the past 5 months, lower highs and lower lows has been the pattern. So from here, our support is the lowest price we've seen of $21 on the dot. 20.89 is also a level. And resistance, the middle Bollinger Band on the weekly has been rejecting the price, and the bulls have to get over 23.86 for this weekly lower high pattern to break to start favoring the bulls. So there's a lot of work to do in order for the bulls to turn things around. It's been very slow. Back in the early, it was Q1 and Q4 of 2016, where we were watching the tons of volatility in the miner space and a ton of volume and dollar money coming into the sector. And that was because of the market being so unsure about the Fed that every time the Fed event came up, the market reacted significantly because there was so much uncertainty. Whereas these days, the market is pricing in the Fed moves because the Fed moves are pretty much known in advance as to what's going to happen. And the market really has a sentiment that all is looking in the same way, where back, months ago, it was about a 50-50 split at times as to what could happen, and it's those surprises to the market that lead to the increased volatility, and that's gone. So we do not have the crazy volatility that we did have. Traders are leaving the space, money is leaving the space, and it's a lot less lucrative in terms of that volatility. So that's a scenario where personally for me, I would be looking, at other sectors and looking to bounce around and find that volatility, and certainly we'll come back to the miners once things pick up again. But as of right now, the bear miners have the momentum. So GDXJ had a nice uptrend all of May and June, little higher low, higher high pattern. Then we set our lower high and lower low. As soon as we broke 32.15 and 32.13, we broke the higher low pattern. So now we're looking for lower highs and lower lows. Middle Bollinger Band is resistance here as well. Weekly time frame. 5 months of pullback, lower highs and lower lows. And we're looking down. The key lowest price that we've seen here is 29.33. And if that level breaks, we know there's further downside coming. So over the past 5 months, the uptrend has been with the bear miners. And obviously there's a lot of back and forth as to definitely ways to make money in both directions if you are a day trader. But in terms of swing trading and longer term holding, the bear miners is where it's at. So looking at silver, we had a very oversold bounce, and it did end up playing out where we have the RSI on the daily time frame did dip down into the low 20s. So the bounce that we've seen here, 15.16 up to 16.07, so almost $1, pretty much a 5% bounce over 5 days. So that was a really nice bounce. And we look back and we bounced off of the 20 RSI last time and had a very significant bounce. So we're bouncing a little bit sooner in terms of oversold RSI. Not expecting to change the trend here. I'm looking at resistance of 16.20. And really to change the trend, I would need to see a break of 16.88. That's a very long way away, and I don't anticipate that to happen unless we can bounce, set a lower high, pull back, set a higher low, and then get a higher high to reverse this trend. The weekly time frame shows us just how significant the pullback has been, and that long lower wick is a fluke trade. We didn't dip down that low. But, I mean, just zooming out, silver has been in a lot of pain for the past 6 years. We had a nice bounce in 2016, and that is now fading. We're almost giving back all of that bounce. At this point where we currently stand, we've given back 2/3 of that bounce. So just want to point out that these precious metals are not in a strong point, technically speaking, looking on the weekly longer term time frames. They have shifted after the bounce in 2016. They have now shifted back to favoring the bears as we set lower highs and lower lows. So that is what we're looking at. Certainly opportunity, day trading, both directions, even short-term swinging. But if you are long-term, the bulls are definitely very concerned that we keep breaking these higher lows and we are shifting back towards favoring the bears. USLV, so that nice bounce, 903 was the low, and we got up to 1056. So that's a 15% move, over a 15% move in 5 days from those oversold levels. And for here to change the trend, we have to form higher lows and higher highs. We got a little mini one right there, but I need to see 1234 break, and we're not just going to shoot up to 1234. We'll have to consolidate, form higher lows along the way. But it's the same thing where we're in a very clear downtrend. Look at the past year and a half of USLV, just lower highs and lower lows. And USLV is definitely not a long-term hold at this point. You always want that trend in your favor. And personally, I would be waiting for a trend change before going bullish long-term. So that's just my opinion on technically speaking. Fundamentals are completely different. If you think the market being so strong obviously is not helping these precious metals because there's no scared money in the market. Everybody's making money hand over fist in the market, and that is not helping these precious metals, which are viewed as a safe haven when the market is weak. So I'm very, very cautious bullish. I don't like playing the market bullish right now, these bull miners at this point. I would personally just be waiting to play them bearish or not playing the sector at all. And that's just my opinion, technically speaking. So I appreciate you watching, and we'll check back in.